And we're back. Now, Rick, over the last couple of years, HIS has expanded abroad. Certainly, we've talked a lot about having teams across the country here to make sure to build our business outwards, and now we've taken that across the pond, as they say. That takes a hell of an effort, and it certainly takes a lot of coordination and a lot of teamwork. Can you tell us about some of the things that are happening?
Yeah, actually, you know, what's really unique is, and I know we've talked about this before, never under any circumstance would I have ever envisioned going overseas. The reason for it is because I only feel comfortable when I know something and when I'm involved in something. And so for us, taking a trip out to Europe and doing some business overseas is a huge milestone. But the reality is the only reason why it's happening is because we have relationships with specific people that we've been doing business with here in the U.S. for years. So we've cultivated that trust, who have shown a level of performance that we felt comfortable with. And only then were we able to then put together some of our current investments here in the U.S. and pledge them as collateral as we begin embarking in other projects overseas. Why? Because for me, being a good steward of people's funds is crucial. So as we're taking another step with investors and we're asking some of them to take that risk with us, we needed in the beginning, as we were proving our track record overseas, we needed to give them some collateral here in the U.S. to protect them in the event that something went wrong. So that was critical. Now, with that said, one of the bigger projects that we actually started with was an actual distress note where there was a family that was extremely successful. And obviously, as you have seen, there's a ripple effect throughout all the countries of the market being unstable financially. So a lot of these affluent families, much like all of the smaller clients, you know, individual people who are losing their homes, well, a lot of the very successful, wealthy people also had financial troubles. So what they actually had to do, the only difference was they had more resources. So what they had to make a decision on is, hey, do we let these businesses go and just cut loose from the past? And some of them actually had, of course, you know, personal guarantees with millions and millions of dollars. So this particular project, though we did not embark on the entirety of it, this was brought by one of our very, very tight relationships that we had over there, who is a mover and shaker, has over 25 plus years in the business. And he started the process of the negotiation of this transaction. We helped facilitate this deal. And I'm pretty proud of being a part of it. It's actually a pretty substantial project. Now, because the note was in default, and because this particular family, that I don't want to mention here, but this particular family was in the process of transitioning and repositioning their wealth and getting rid of kind of the elements that were holding them back, if you will, this opportunity came to us. And just to give you perspective on previous notes, this represented various asset types, from literally dealing with land that was to be built, and acres of land to be built, to colleges, to large commercial parcels of land, townhomes that are being built. So this is not just one small single-family property. This is definitely not just one park or one industrial site. This is various large projects. In this particular one, and I'll talk more about our ultimate due diligence, but when we actually started working on this file, this particular family had a total of 14 assets that were substantial within this. The actual valuation, and I'm going to talk about in euros because that's basically what this particular transaction was overseas. The original loan for this particular project, the face value of the note, was actually a total of 140 million euros at the height of the market. So we're not talking $20 here. We're definitely not talking 20 grand. We're definitely not even talking $10 million. This is a very substantial transaction, and this was a very affluent family with various businesses. And funny enough, this is just 14 of probably hundreds of the assets that they've owned. So while it sounds like a sad story, the reality is they're repositioning. Now, in this particular case, we talked about the fact that this had 14 assets with a total value of, back in those days, that amount. Now, what we did is we ultimately, in our due diligence, decided that we were going to work a deal with this particular family and have them basically sign what we call here in the U.S. as a short sale. In other words, it's kind of like a deed in lieu. So what we did is a two-game strategy. We worked with the seller, if you will, to participate in signing over the assets, while we simultaneously became the note buyer and went directly to the actual note holder. And let me tell you, when you're dealing with a note transaction, a bank with this type of number on their books is very eager to negotiate. So what we ended up doing is we selected some collateral components in this particular project again, this was actually already done by our team, and it's crucial to have the right team in place. He was at this level of experience that he was able to work directly with the bank and get these types of figures.